What does Wealthsimple Invest and Tesla have in common? They both have autopilot. In today's video, I will be reviewing Wealthsimple Invest. Watch this to the end to find out if this investing platform is right for you. What is Wealthsimple Invest? Wealthsimple Invest is Wealthsimple's Robo-Advisor platform. This platform matches you with a low-fee, diversified ETF portfolio and also manages your portfolio by investing every cent you deposit, rebalancing assets, reinvesting dividends, and even using tax loss harvesting. If you're interested in a step-by-step tutorial on how to open a Wealthsimple account, check out the link at the end of the video or in the video description. In order to match you with a portfolio, Wealthsimple will ask you a few questions to determine your risk tolerance. The higher your risk, the more you'll be invested in equities. The lower your risk tolerance, the more you'll be invested in fixed income like bonds. Your risk tolerance will depend on many factors, like how much time you have to invest. The more time you have to invest, the more risk you're able to take. Also, what would you do if your portfolio was down? Would you get scared and sell? If so, you have a lower risk tolerance. But if you notice your portfolio is down and you think to yourself, stocks are on sale, I should buy more, then you have a higher risk tolerance. Wealthsimple Invest has 10 levels of risk and 3 main portfolios. Level 1 to 3 are part of the conservative portfolio. The allocation ranges from 70% fixed income, 30% equity, to 60% fixed income, 40% equity. This portfolio has an MER fee of 0.16%. Level 4 to 6 is part of the balanced portfolio. The allocation ranges from 50% fixed income, 50% equity, to 35% fixed income, 65% equity. This portfolio has an MER fee of 0.17%. Level 7 to 10 is part of the growth portfolio. The allocation ranges from 25% fixed income, 75% equity, to 10% fixed income, 90% equity. This portfolio has an MER fee of 0.16%. These MER fees are among the lowest in the industry. Now let's take a look at the performance of the growth portfolio, risk level 8. This portfolio invests in 80% equity and 20% fixed income. Since inception, August 20, 2014 to the end of 2019, this portfolio has grown 39.9%. Here are the annual returns since inception in 2014. Now let's compare this portfolio to Questwealth's growth portfolio, which has the same asset allocation of 80% equity and 20% fixed income. Let's get rid of 2014 because Wealthsimple's portfolio didn't start till August, so it wouldn't be fair. After you add up all the totals, Wealthsimple after 5 years has a 36% total return and Questwealth only has a 32.57% total return. A difference of 3.43% in favor of Wealthsimple. This is only one comparison. When comparing the performance of a portfolio, the asset allocation should be the same for a fair comparison. But there's a few things you need to consider. Past performance doesn't guarantee future results, and your returns will depend on when you buy and when you sell. For example, if you invested December 2018 during a correction, your returns will be much higher than if you invested before the correction or after the market has recovered. Wealthsimple also offers themes for your portfolio. Standard, which is the portfolio I just went over. Socially responsible investing, which only invests in low carbon, clean tech, or sustainable growth companies. Be aware that this theme has a higher MER fee that ranges around 0.27 to 0.43%. And they also offer halal portfolios, which only invest in companies that comply with Islamic principles, so no bonds or GICs, no companies that profit off alcohol, tobacco, gambling, pork, weapons, etc. This theme has a higher MER fee because it's an all-equity portfolio. After you pick a portfolio, you'll need to pick an account type. Account types range from RRSP, TFSA, Personal, RESP, RIF, LIRA, Joint, and Business. If you aren't familiar with the account types or new to investing, the TFSA is usually your best account to start with. This account allows you to avoid taxes on the gains you earn. But be aware of contribution limits and other TFSA rules. Another popular account is the RRSP. Any contributions to this account is tax deductible and taxes are deferred until you withdraw. Before picking an account, make sure you do your own research to determine which account is right for you. After you pick an account type, you'll need to fund your account. You need to link your bank account so you can create a one-time deposit or a recurring deposit, or you can do both. You can deposit more money at any time and change your recurring deposits at any time. If you already have an account like a RSP or a TFSA at a different financial institution, Wealthsimple will cover the fee the other institution charges you, which can range from $50 to $150. For Wealthsimple to cover the fee, the transfer must be $5,000 or more. Wealthsimple also offers passive ways to fund your account, like the Roundup or the Overflow feature. With Roundup, every time you make a purchase with your debit card or your credit card, Wealthsimple will round up the purchase to the nearest dollar. Then that spare change is added to your portfolio balance and gets invested. With Overflow, you set the balance of your cash you need in your checking account, and any extra cash will be automatically transferred to your portfolio balance. Setting these automatic deposits can really help grow your portfolio and can keep investing completely passive. Before we get into the fees, can I get you to hit that like button if you like this video and share this with your friends. One of the most important factors when choosing a Robo-Advisor is the fees. Basic for accounts $100,000 or lower. With this plan, your management fee is 0.5%, which is average for a Robo-Advisor, but double the price of Quest Wealth, the Robo-Advisor featured in my last video. Included in this plan is a personalized portfolio, expert financial advice, auto rebalancing, auto deposits, and dividend reinvesting. You need to take into consideration that the 0.5% management fee is added to the MER fee of the portfolio you choose. So the management fee and the MER fee will equal your total fee. For those who deposit more than $100,000, you'll get access to the Black plan. This includes all the features of the basic plan, plus a reduced 0.4% management fee, financial planning sessions, tax loss harvesting, tax efficient funds, and also a membership to Priority Pass, which will give you access to over 1,000 airport lounges. And if you manage to have an account $500,000 or more, you get access to the Generation plan. This plan has all the features of the other plans, plus in-depth financial planning, asset location, dedicated team of advisors, personalized financial report, individualized portfolios, and 50% off Medcan Health plan. Other fees to consider besides the management fee and the MER fee is the currency conversion fee. Wealthsimple charges a 20 basis point fee on currency conversions when it's needed to buy and sell US dollar securities. And according to Wealthsimple, there's no other fees for withdrawals, transfers, or inactivity. Another feature Wealthsimple provides is a portfolio review service, where expert advisors will review your entire portfolio, help you set goals, diagnose your fees, and lower your taxes. This service is available for everyone for free. Wealthsimple also offers a refer a friend program. For each friend you refer, you get $10,000 managed for free for 12 months. But if you can't refer anyone, there's other ways to get your portfolio managed for free. When you use my link to sign up, you get $10,000 managed for free for 1 year. Also turn on auto deposits and deposit at least $50 a month and you'll get an additional $1,000 managed for free. Not sure if this offer expires. Get the mobile app and get $100 managed for free for 12 months. Set up two-step verification and get another $100 managed for free for 12 months. And if you transfer an account of at least $5,000, you get another $10,000 managed for free for 12 months. I've been using Wealthsimple Invest since June 2019. I started with a $500 one-time deposit and set up automatic deposits for $25 a week. As of January 21st, 2020, I have a total of $1,438.07. $88.07 of that is my return so far, which is a 10.1% money-weighted return, 9.6% time-weighted return, and a 6.9% simple return. My portfolio is a standard theme, and the risk tolerance is level 8, 80% equity, and 20% fixed income. I haven't had any issues with the platform, and most of the time, I forget it even exists. But when I do check my portfolio on either the app or the website, I'm pleased with the simple minimalist design and usability. You may be thinking, why don't you just buy the all-in-one ETFs and eliminate the management fee altogether? Many reasons. If you buy an all-in-one ETF, yes, they rebalance themselves and don't have a management fee, but you need to have a brokerage account that may charge you a quarterly fee. Or maybe your broker doesn't even offer free ETF trades. Or maybe they're only free when you're buying and not selling. So you may have to pay a trading fee when either buying or selling ETFs. And when buying ETFs, with most brokers, you can't buy fractional shares. But with a Robo-Advisor, every dollar you deposit is invested automatically. Also with a Robo-Advisor, your dividends are automatically reinvested. If you buy ETFs, you will need to set up a dividend reinvesting program. And you can only reinvest whole shares. So if your dividend earnings are less than the ETF price, your dividends won't be reinvested. Another thing to consider is if you want to buy more ETFs, you need to buy them yourself. But with a Robo-Advisor, you can set up automatic deposits, and with Wealthsimple, you can set up the roundup feature or the overflow feature to grow your portfolio even faster. So for some people, passively investing with a Robo-Advisor is worth the management fee. I'd rather invest in individual stocks for a higher return potential. But with investing in individual stocks come a lot more work, like listening in on conference calls, reading quarterly and annual reports, and constant overall research. Whenever you're using a Robo-Advisor or buying ETF stocks, your overall return is limited than investing in individual stocks. If you're interested in buying and selling your own ETFs or stocks, Wealthsimple also offers Wealthsimple Trade, a commission-free stock trading platform. Click this video up here for the review. But if you want to be a set and forget it investor, Wealthsimple Invest is as good as it gets. Next week, I'll be doing a video on Wealthsimple Cash. So if you don't want to miss that video, make sure you subscribe and hit the bell icon. Thanks for watching. Until next time, keep making money moves. Peace!